Last year, I made 24% with a strategy that takes about 5 minutes a day to manage. No leverage. Just trading SPY and beating a simple SPY buy and hold strategy. Most traders are glued to their screens all day. I check mine once in the morning, execute if there's a signal, and I'm done. Now look, I know what you're thinking. Another strategy video. But stay with me, because I'm going to show you the walk-forward testing I did, the Monte Carlo analysis, and the real results. This is a short-term strategy. You're holding positions anywhere from 1 to 10 days, maximum. Entry is at the market open, exit is at the market open. That's it. You'll also get the TradingView Pine script strategy and the RealTest code. I'll share those with you. I added this strategy to my portfolio last year with a very small position size. That year turned out to be so profitable that I decided to share it publicly. So here's the question everyone asks. Why would I share this strategy? It comes down to two main reasons. First, this strategy is based on real market dynamics and underlying market structure. It's not a short-term arbitrage that stops working the moment other people discover the same rules. Second, we're trading SPY. SPY trades between $500 million and over $1 billion in daily volume. That means if a few more traders start using this strategy, it doesn't matter. Unless you're entering the market with billion-dollar orders, and retail brokers won't let you do that anyway, liquidity is not an issue. This strategy relies on natural market behavior, not fragile patterns that break easily. Now let's look at the walk-forward analysis. What is walk-forward testing? Don't worry, it sounds complex, but it's actually very simple, and I've already done it for you. Walk-forward testing is one of the most important ways to check whether a strategy is truly robust. Not everyone does this because it's not available on every platform. For example, TradingView doesn't support it. That's why I used RealTest, where I can easily run proper walk-forward tests. I tested two main things. First, I added a regime filter that detects the market regime and adjusts the exit logic accordingly. Second, I tested different lengths for the main entry indicator. The main indicator is essentially a momentum-based indicator. It measures trend strength by comparing a security's closing price to its overall trading range, then smooths the result to reduce noise. Here's what the results show. On the left, you can see the in-sample results, which look excellent. On the right, you can see the out-of-sample results, which are still very strong and continue to beat SPY itself. This clearly shows that the indicators are robust and stable across multiple market regimes. That's the goal. I never trade anything that hasn't proven itself through walk-forward testing. I work in quantitative research every day, and while these tests might look small, they're actually the most time-consuming part of the process. But they're critical. Next, I wanted to determine which indicator parameters to use to ensure robustness. I'm not choosing the best performing parameter, I'm choosing the most robust one. The goal isn't to maximize backtest performance because the best parameter often fails in live trading. Robust parameters, on the other hand, have consistently worked across different market regimes, which makes them far more reliable. Before we look at the parameter analysis and results, if you're using RealTest, check out our website, where you can find useful trading strategies to add to your portfolio. I then tested the strategy with the regime filter to evaluate performance across different regimes. For the parameter analysis, I use Python because it offers many libraries and tools to quickly test different statistical properties. As you can see, the strategy performs consistently across regimes. The Sharpe ratio ranges from about 0.6 to 0.75, which is very solid. What I don't want to see is one parameter with a Sharpe ratio of 1.5, while the others are around 0.6. That's a clear sign of overfitting. In that case, the high Sharpe parameter is almost guaranteed to fail in live trading. Since the regime indicator performs well across a wide range, from 20 to 150, I chose a value near the center of that range. Here's a quick Monte Carlo simulation, which is also an important part of the analysis. You can see the best 40 and worst 40 equity curves. You can also follow us on Substack, where we discuss and test academic papers, trading strategies, and share useful trading and AI insights. Now let's talk about the results. This strategy does not use leverage or margin, although leverage could be applied since it's a short-term strategy. Even without leverage, it outperforms SPY across every major metric compared to simply buying and holding. If we look at the monthly percentage returns, you can see how strong the recent performance has been. Last year alone, the strategy returned over 24%. If you don't like this level of drawdown, You can easily add a simple 200-day SMA trend filter. With that filter applied, the equity curve looks much smoother. So you might be wondering, how can you get this strategy? Click the first link in the description to learn more. You can download the full rules, the trading view strategy, and the RealTest code. Even if you're using TradeStation or another platform, the rules are clearly written and easy to implement. If you have any questions, leave them in the comments or email me, and I'll personally respond. Click subscribe, and I'll see you next time.